Hi, Kadir.
Hi, Brandon.
What's up?
Nothing. Can we go to the AGI team?
Yeah, for sure.
Right. Now, this segment today is on alternative investments. And alternative investments are of many types, investing in a startup, investing in private equity, peer-to-peer lending, and for the matter of fact, in real estate. Now, alternative investment gives us the opportunity to earn higher returns, at the same time not invest in something which is linked to the stock market or the bond market. So having said that, let's go to the AGI team.
Let's go.
Hi, Mr. Akash. Morning.
Good morning.
How are you?
I'm good. How are you?
I'm doing well. This is Brandon here. He works with me, and he had a few questions regarding AGI. So I thought, who better to introduce him to you.
Pleasure. Please come in. Let's have a discussion.
Thank you.
So to begin with, and for our better understanding, if you could tell us, what does AGI do?
So, Ashton Gray Investments is our Indian arm of our US company, which is Ashton Gray Development. So we have been in this business for like 13 years. So we started with flipping homes, and right now we do multiple variety of asset classes like luxury spec home, multifamily, retail, and commercial. And also to add, where 2 years back we also specialize in master plan development, which means that we do the development, and for the construction we will be giving the contract to the public home builders. So this is what we do, and right now currently from India, where we give the opportunity for the Indian investors to invest in the US real estate market.
Fair. So what the current Indian investors are investing when we talk about alternative investment is under fractional real estate, right? So how do we distinguish a fractional real estate happening in India versus an investment in the US market?
This gives us the upper hand. So rather than just being a management firm, we bring in our own land development projects, giving Indian investors a high return, low risk investment opportunity.
Okay, so now that we've understood that, if you could please explain the structure of AGI and the risk involved with investments.
So talking about the structure, here is where we follow completely through a partnership, taking it through an overseas direct investment, completely being approved by RBI.
And also to talk about the risk involved, over here if you see, we do the risk analysis by ourselves, where whatever projects we are launching here in India is already a pre-sold one, by which I mean where we give the contract to the public home builder.
Right. So to sum it up, we have an RBI approval in place for the entire structure. And to make things better, the investment which the client is bringing in is not for a new project per se, but on an existing pre-sold property which is used only for the development. Right. So now that we've learned about AGI, the structure behind it, right? I think what we would like to learn a little bit more about is the track record of AGI in India.
Okay. Yes. So where here in India we have launched 5 projects. The 4 is already fully funded, and also to add, where we have already exited 3 projects. And the current project is called Elgin. Elgin is in located near Austin. So for this, the minimum investment is 25 lakhs, and we have also come up with 2 structures where you can earn around 20% or 23% returns.
Okay. Fair. So Elgin is the 5th project that we're talking about, which is currently live.
Yeah.
All right, makes sense. Now, I think it's also very important to understand this question, right? Because this is where we want to make sure that people who are interested understand the basics of this project, right? And that's liquidity, right? So how liquid is an investment with AGI? What is the maturity period like?
So for the current project, it is a 3-year lock-in period, and our tenures differ from project to project as well, which is all lock-in period basis.
Right.
And apart from this is where we have, for the current project, as you had mentioned earlier, is we have 2 structures. One is for 20% and the other one is for 23%, where in 1%, that is 20%, you have a passive return structure on a monthly basis. And for the 23 is where everything is based on a lump sum, which you get at the end of the project tenure.
So now that we have a good clarity about the liquidity of this particular project, we want to understand the taxation as well, right? be it for a 20 or a 23% return on this particular project, right? What is the taxation structure like?
So talking about the taxations, here we follow the Indian taxes itself, where as per the rules and norms, we can provide 12% interest on capital, and the remaining percentage comes as per the LLP standards itself.
Right. So I understand that, we've been very transparent through the entire procedure, taxation, liquidity, but I would like to tell people that, it's very important to also run your own due diligence, right? To understand that, does this particular asset class make sense to me and how well placed I am to start my journey with AGI, right? With that, Brandon, I want to check with you as to, what are the key takeaways from this discussion that we've had today.
Yeah, so what I understood from the discussion was that how hedging is important and how we can hedge our portfolios using opportunities provided by Ashton Gray. And also how diversification and asset allocation is important for your portfolio.
Exactly. So thank you so much for taking your time and joining us.
Thank you.
Thank you for your time.